Next, we have a panel on global blockchain challenges and opportunities. I'll introduce our speakers, assuming they're mic'd up and ready to go. Alan Cohn, he's a partner with Steptoe & Johnson. Let's make sure we're, okay, great. Meltem Demirors with the Digital Currency Group. Niraj Kulshrestha with the Bombay Stock Exchange. Joshua Leland with Chemonics International, and Justin Newton with Netkey. A few panels ago, I saw on the board some of the potential use cases. One of them that someone texted was Chuck Norris. So if you guys can, that's going to definitely be one of the blockchain challenges, finding out how to get Chuck Norris on a blockchain, contain him in a blockchain. Thanks.
Well, good afternoon, everyone. We are the Global Blockchain Challenges and Opportunities panel. They're an awesome bunch. So it's not just the commercial applications of blockchain that are exciting the community. Distributed ledger technology can significantly improve the way that medical supply chains, education, AIDS, and other philanthropic initiatives are executed and accounted for. This truly global panel will discuss ways in which the revolutionary technology can play a major role for social good, contributing to societal advances in both developing as well as emerging economies. So my name is Loretta Joseph, I'm the moderator. If you can't tell, I'm Australian. I'm the Industry Advisory Council Chair of the Australian Digital Currency and Commerce Association. My road to blockchain didn't start commercially. I lived in India for a long time. And I remember in about 2010, I had a group of staff that worked for me in India, and 3 of them had no identification. And in 2011, I had a staff member that had a little 14-year-old girl that got raped and murdered. And I couldn't even stand up for her because she had no identification. And I thought back then, there's got to be a better way. We can't live in a society where you come and go out of the planet with no recognition and no identification. So about 2 years later, I discovered the blockchain, and I think that's going to change the world. So my panellists here, we have Niraj, who's the Chief Operating Officer at the Bombay Stock Exchange, Alan, the Counsel at Steptoe & Johnson, Josh, who's the Director of the Blockchain for Development Solutions Lab at Chemonics International, and Meltem, who's the Director of Development of Digital Currency Group. Justin's the CEO and founder of Netkey. So Niraj, first question for you is about India. With a population of 1.3 million people, India faces significant development challenges. Yet the growing middle class is already larger than the population of the US. What is the main focus of the blockchain initiative in India? Is it services for the middle class or the social and economic inclusion for the disadvantaged?
See, from a social point of view, excuse me, I think there are how do you, the question that this country faces is how do you do targeted benefit to the common people? And linked to that is the identity point that you raised. So currently, of course, the government has done a great initiative whereby they have something called Aadhaar, which is a unique identification number, which is a 12-digit identification number. So in a way, what we have done is in India, we have created our own internet with 1.2 billion users. And so it's a centralized database. So I understand that there is, let blockchain become more matured. There would certainly be usage of blockchain, mainly from the security point of view. But here we have 1.2 billion all linked to the bank account. So currently we have these 1.2 billion Aadhaar cards which have been issued to all the population. And these are linked to your bank accounts. So linked with that, there are, just imagine in the last 3 years, 280 million bank accounts have been opened in the country, which are linked to this Aadhaar number. And along with that, linking the two, so Aadhaar is also biometric and fingerprint based. It's an identification system, so which then can be used for targeted benefits and which has been used. So to give another example, the government has saved $2 billion last year in the benefits, targeted benefits, which is expected to grow to $7 billion in the next 3 years. So that's the kind of scale we are talking about. And the last point is that, in fact, this whole ecosystem has recently been used by one of the new mobile company, which is called Reliance Jio, where they have opened 100 million accounts in the last 6 months. That means 7 accounts per second. So that's the scale. But having said that, because it's centralized, so there is a significant need for more security distributed databases. I fully understand that, and I think that's from my specific point on that.
Okay. So, Meltem, thinking beyond India, let's talk briefly about the role of the Bitcoin and the digital currencies in financial inclusion. What type of products and services are startups offering customers, and is it focused on the digital identity solutions or new payment products?
That is a great question. So fully recognizing this is a blockchain conference and everyone in this room is very excited about the myriad of applications that blockchain technology could present, I want to go back quickly to Bitcoin and digital currencies, which is really where this journey began for many of us. At Digital Currency Group, we started investing in startups in the Bitcoin space in 2013. And our portfolio, which is now almost 100 startups across 26 different countries, represents very much the evolution of the ecosystem. We started with Bitcoin, then it progressed to blockchain. Now we're focused on digital identity, decentralized computing, and a number of applied cryptography applications. But going back to Bitcoin, I think what's fascinating is we pull data from the 20+ exchanges around the world that we've invested in. And many of these exchanges that started just as buying and selling platforms for Bitcoin have realized there's this new financial system that can be built. If you think about Visa, if you think about MasterCard, if you think about ACH, these are networks where value is tokenized and traded kind of as an IOU between institutions. What Bitcoin represents for the first time and other new digital currencies, whether they're created by governments, whether they're created by open source projects like Bitcoin has been, is the opportunity to exchange value in an open system. So some stats, since Niraj had lots of stats, I want to provide some as well. So in January 2016, so just over a year ago, across our companies, there were 4 companies that were dealing in cross-border payments with Bitcoin, B2B payments, where the Bitcoin component was completely abstracted away. So all I would see is I'm sending money from the US to my supplier in China, let's say, and I know it happens cheaply, quickly. I don't know that Bitcoin's being used. Last year in January, that volume was $6 million. This year in January, that volume was $46 million. So that represents a 25% month-over-month growth rate for the use of Bitcoin for digital payments. And if you think about that, that's only 4 companies. There are hundreds of companies around the world that are using Bitcoin, that are using Stellar, the Ripple network, to send payments. And I think as you think about the opportunity for people in countries who may not have access to financial services, who may not have access to bank infrastructure, they can now go onto their smartphone. And one of our companies in Indonesia, CoinsPH, is actually allowing people to do this, is you can go onto your smartphone, you can receive local currency in your digital wallet on your smartphone. So if you don't have an identity, but you have a smartphone, your employer can pay you with digital money. You can then, through your smartphone, top up phone credits. You can buy services. You can buy services on Steam now with Bitcoin if you're a gamer. There are now many different ways that people are using this currency. People who don't have identities, people who don't have access to financial services, they can now access credit. They can access online payments. They can access credit services. It's just opening up a whole new field, and I think it's tremendously exciting. So blockchain, tremendously innovative and many applications, but I think the component that we're really excited about is still Bitcoin.
Oh, thanks, Meltem. So Josh, what do you and the team see as the most important use cases? And is that supply, health supply chain management?
Yeah, thanks, Laura. No, that's definitely one of the use cases that we're looking at. And to give a little bit of context to my comments, for those of you who don't know who Chemonics is, we're one of the largest international development consulting and project management firms in the US. We manage dozens of programs and billions of dollars in foreign assistance on behalf of the U.S. Agency for International Development, USAID, other donor organizations like the United Kingdom's Department for International Development, the Swedish International Development Agency, philanthropic organizations like Gates, and multinational corporations that operate in developing country contexts. So in this past fall, we launched the Blockchain for Development Solutions Lab with a partner, BangQ, which is a blockchain company that has created an economic identity platform for the express purpose of trying to eradicate poverty in the developing world. So we're looking at several different use cases. The health supply chains is definitely one. We manage the U.S. government's global health supply chain program. So we procure billions of dollars of pharmaceutical products from the U.S., Western Europe, India, and ensure that they get to the patients at the end of that supply chain in places like rural Botswana. And so those are complex supply chains. And I think with products and manifestos moving through the hands of multiple actors within those supply chains, the opportunity to use blockchain and supply chain solutions, which others are looking at as well, to really create efficiencies and transparency and insight to the last mile could really drive efficiencies in that process, make sure that those products get to the people who need them. These are life-saving drugs for combating HIV/AIDS or for malaria or tuberculosis. And so that's definitely a really important use case that we're designing solutions around. In addition to that, I think the benefits to promote financial inclusion are huge. Yep. We were talking about stats. A colleague from BankU issued a paper this morning on the next billion, noting that there are 400 million MSMEs in the world, and about 40% of them don't have access to a bank account or to financial services. And there's a real opportunity here to, and the reason why is because those services are too expensive, and banks are not willing to serve them for good reason at the moment. But I think one of the things that we feel obliged to do is try and identify those use cases around financial inclusion and be that facilitator between blockchain entrepreneurs and the government that are interested in promoting the well-being of their citizens, and really try and get those solutions on the ground, test them, pilot them, and see which ones work, and then try to help scale them up.
So I guess that moves on to you, Alan. So how's this all going to work from a global regulatory and policy perspective? And how are the government requirements going to be met in the most efficient way possible?
In 90 seconds.
Yeah.
Well, no, I mean, we have the benefit of the fact that you've heard over the last day and change a lot about the different regulatory challenges and the different regulatory progress. What's interesting in this environment is when you're thinking about, say, a supply chain from one country that's supplying goods into, say, the United States. You're dealing with your companies and participants along the supply chain. You're dealing with a government in one country. You're dealing with a government in the other country, all of which have a vested interest in that supply chain. When we talk about some of these applications, though, some of these applications are meant to apply in areas where the government isn't necessarily favorably disposed, not only to the technology, but just to the existence of the supply chain, or the supplying of that particular population, or the empowerment of that particular population. And so it introduces another level of complexity when you're talking about governance, when you're talking about regulatory posture, when you're talking about engagement of government. And so some of the same things that we've heard on different panels still apply. Engage with government, influence the regulatory policy, get the tools in the hands of the government so that they can understand it. But at the same time, some of the advances are meant to work in different ways than the government may work on its own. And so that's just a complication and a need to understand that the technology is not a panacea, that it is the actuality that may be working at cross purposes to the government, not necessarily just the technology, and to kind of build that into the overall approach for how you're looking to do an implementation in that area.
So I guess, Justin, what do you see for the role of standards?
Well, I mean, maybe to follow on some of what Alan's saying, it's one of the places that these international rules add a lot of complexity is suddenly companies that are coming into this space as startups or as service providers are day one playing in the same international regulatory regime that a Citibank or a Bank of America or Goldman Sachs would be, at a time where they don't have the legal resources, the compliance resources, and the other resources to maybe even understand what a lot of the challenges are that they need to take on, much less address them appropriately. And so it's an area of real focus. Standards are an area that can help with that, right? So by as much as possible, we can create, open standards to help support these requirements that work across public and private blockchains and work across borders in a standards-based way, it can help make it easier for the large enterprises as well as the startups in this space to have a way to interoperate and work with each other. And in particular, when you're working on open permissionless networks like Bitcoin or like Ethereum, it's important that anything related to the compliance piece be done in an open standards-based way so that we don't end up recreating closed networks on top of an open and permissionless one. You want to ensure that you are kind of sticking to that nature as much as possible.
Yeah, no, I couldn't agree with you more. So Melton, let's talk about the interoperability then from a business and a regulation perspective.
Sure. So I think over the last 2 days, there's been a lot of discussion about interoperability. And I think right now in the blockchain ecosystem, the word interoperability a lot of times refers to technical interoperability. But just continuing off of what Justin was saying, I think there's a massive opportunity here for interoperability from a business process perspective and a regulatory perspective, which is why organizations like the Chamber and similar organizations around the world are so critical. They have to partner together. When you are building a company in this space, so I'll use Bitcoin again as an example, New York DFS rolled out a law. It's called the BitLicense that applied to companies that were holding customer funds or using virtual currency. And complying with that licensing cost a startup $50,000. And if you look across the US, there are 50 states, right? Each state has its own regulator. So all of a sudden, if you want to operate in 50 states, you take $50,000 and you multiply it by 50. That's a lot of money. And if you're a startup and you've raised 3 million or 5 million, you're not a JP Morgan, you're not a Citibank, it's a massive compliance burden. And so I think all of us are proactively thinking about how can we actually use digital identity solutions? How can we use KYC AML solutions to lower the cost of compliance, but also to start to create a dialogue with international regulators about how we can actually create a truly borderless global financial system. And that could span across, payments. It could span across supply chain finance. You name the application. Maybe it's healthcare data. Maybe it's consumer privacy data. There's a massive opportunity here for global coordination at a process level. But I think what the challenge is regulators have to be educated. And this technology presents a fundamental paradigm shift. So you can't regulate a blockchain company in the way that one might regulate a bank. You can't regulate a Bitcoin company in the way that you might regulate a payments company. And that paradigm shift is going to be challenging. It's going to create friction. It's going to take time. And I think there will be cases coming over the next few years that set very important legal precedents as to how the startup community, organizations like the Chamber and others, and investors and corporates sort of work together to resolve some of these challenges.
Yes, I think hashtag we're all in this together.
Yeah, definitely.
So I guess, so Josh, going to AIDS budgets then, I think they're really under pressure in most developed countries at the moment. Can the distributed ledger solution help improve efficiencies and measure the impact of aid delivery?
Yes, I think it absolutely can. Just as the banks have started to look at ways that they can make their back office operations more efficient, I think that's true for government and for many businesses. And so, we manage hundreds of millions of dollars worth of U.S. government funds when it comes to foreign assistance, and so we're a steward of the U.S. taxpayer dollar. And one of the things that we've looked at, we just launched this week actually, is a particular use case around, I don't want to bore everybody with the minutia of government contracting, but there are particular business processes that we obviously have to undertake as a contractor with the U.S. government, and frankly, a lot of them are administrative and bureaucratic and don't feel like they add a lot of value and take a lot of time. In particular, every time we hire a consultant and send them out to the field, they have to fill out a biographical data sheet, which essentially is just a one-page piece of paper that describes that consultant from sort of an economic standpoint, their citizenship, their education, their language proficiency, their salary history from the last 3 years, and that's the basis for the approval of their rate for that particular assignment. Now that process is laborious, and we have to get it right, because if we get it wrong, then we're subject to audit and fines. And it's not that hard when you're dealing with an American consultant or a European consultant, but when you're hiring a a fisheries expert on an island somewhere in Indonesia, it gets a lot tougher to verify education history and salary history. And so what we're looking at are using identity actually as sort of the basis here, using an identity platform to help individuals create their economic identity, validate that information with the institutions that have provided it, and that becomes a single source, a single record of that data. Now when we go to engage them, the plan of the pilot is that instead of having to go through this long process, administrative process, a back and forth, a verification process, we should be able to, basically in what would take days and sometimes weeks, in seconds be able to have this form generated in a way that's more trusted and verified and far more efficient. So there's things like that I think certainly can create value within government processes and can make institutions and organizations much more efficient. And that's particularly true in this budget environment. I think if you're not building weapon systems or walls, then you need to figure out how to do more with less. And so
I guess that leads into my next question. Does private philanthropy have different requirements than the government aid programs?
Question about philanthropy?
So does the private philanthropy have different requirements from the government aid programs that we're seeing?
Yeah, I mean, absolutely. In general, I think the philanthropic world is able to move much more quickly when it comes to some of these more experimental initiatives. I think in these still relatively early days with blockchain technology, particularly when you're talking about developing use cases for the developing world, which is typically a riskier environment, and the value proposition is sometimes more questionable. Organizations like that have a key role to play to sort of foster innovation, and then philanthropic organizations, I think, are really capable of doing that. Governments, though, and the U.S. government being the largest provider of foreign assistance in the world, despite the fact that it's a smaller percentage of GDP than many other countries, but they have a really important role too, because they have the clout to really push on governments in these countries to make those changes that, Alan, you were saying they're sometimes reticent to do. So there's an important role for both. I think just the efficiency with which they can deploy their resources is sometimes different.
Okay. So Alan, do you think there are any particular risks that organisations building social good blockchain applications need to be aware of?
Well, I mean, I think for anybody who's in the space, this is not going to come as a surprise, but I think social good organizations need to think of themselves as much as disruptors of a status quo as a new payments system or any of the types of applications that we've talked about over the last day and a half that are meant to disrupt kind of an existing process. But you're talking about not just disrupting existing players, you're talking about disrupting government processes and government perspectives. In a sense, it's not just Citibank, or Citi that you're competing with, but a government monopoly postal bank, which is a very different type of relationship that both private entities do, but that also social good entities do. So I think that you just have to be cognizant of the directionality of the disruption that you may be causing. It's really important, and it's great that that philanthropic organizations can trace back the identities of their contractors, but we don't necessarily want to host government knowing that. It's great that there is the ability to incorporate in a banking or a payment system, but not in a way that puts the end user in jeopardy. It's great that these types of technologies can link individuals into the global economy, but we have to do that in a way that doesn't disrupt society to such a point that it runs at contrary purposes to kind of the overall aid efforts. So I think that just like any type of disruption, any type of company that understands it will have a disruptive effect, social good organizations need to be thinking in those directions as well, and thinking about who are they disrupting, and in what ways do the areas in which they're working differ from a governmental perspective from the areas in which they're based, and et cetera.
So I suppose, Niraj, then, the issues here, are they the same that the Indian-based organisations are facing, or are they just getting on with it in India?
See, I mean, countries in Asia typically have to be government-driven. So all the major aid efforts have to be government-driven, primarily because of the mass of issues that we have. So private efforts are smaller, I mean, that's the essential difference. But having said that, it's also easier for the private initiatives to experiment, as was earlier mentioned by Josh, because in that, I mean, you can be faster, you can try to do that. But incidentally, if the government starts thinking that way, it can really help. So for example, what I've just earlier was talking about, this Aadhaar mechanism. So essentially, it's a factor of a unique ID, which is a 12-digit ID, your mobile phone, and that's it. Now that, as a framework, can link to anyone. And why mobile phone? Because India being a poor country, everyone could not afford a computer or a laptop. But today, for example, out of the 7 billion mobile phones in the world, 2 billion are in India. And of the 2 billion smartphones in the world, 200 million are in India. And this whole mechanism that I was talking about, targeted, essentially uses an ordinary mobile phone. So there is an app which all that one needs to do is just download that app. You don't need a bank account number. So if I want to transfer you money, I don't need your bank account number. I just need your mobile number. And over and above that, the government has also allowed you to have a virtual ID. So if you just give me that virtual ID, I can transfer money to you. And the other part, which is more interesting, is I can pull money from you. So if I want money from you, I just send you a message, you just say yes, and I can pull whatever amount I've asked from you. So that's the kind of disruption. If the government gets, so the limited point is, if the government starts getting into such disruptive activities, it's very helpful. Having said that, because the topic is blockchain, we understand that, blockchain would be very important for this at some stage when it matures, because things like security with a centralized database would always be a matter of concern. But as with any other technology, or as with anything else, like every technology or any innovation goes through the 3 cycles of innovation, invention, and then finally dispersion. So unless the dispersion happens with respect to blockchain, I think we are some way off. But in the meantime, targeted efforts cannot stop.
A quick question, though. With the government owning this database, what is the risk of financial censorship to the end citizen if the government sort of has all of this bank account data and controls the flow of funds? I think that's sort of the challenge with centralization.
Yes, so you're right. So those concerns would remain. See, it's always a balance finally. What is more important? I mean, finally, the targeting of benefits, was it more important or this? These issues can be resolved over time. But the whole point is, I mean, all that I'm saying is, as long as there's a database, I mean, when I look at blockchain, what's it? It's essentially a database which has some additional features of cryptocurrency, crypto features, hash features, which is more secure. Now, if I have a database, what does the future state look like? That same database, how do I add crypto and all the additional features to create much more secure platform? I mean, that's the way I look at it. And I'm sure we'll reach there at some stage. Conceptually, it's sound. Conceptually, I think it appeals.
Okay. Well, I'm mindful of time here, Justin. I'm going to throw a question at you. So looking around the world, which countries do you think have got their act together to support the blockchain-based innovation, and which ones do you think are going to fall behind?
Yeah, so I mean, there's a handful of countries that have, I think, really been thoughtful and planned what they're doing around blockchain. I've been really excited by what I've seen happening in Singapore with MAS, the regulator over there, where they're not only helping banks to invest in innovation around blockchain, they'll partially fund projects and things like that if they happen inside of Singapore. They also have a regulatory sandbox for fintech companies where if you have a small amount of users or financial data or others, you can potentially build a custom risk scheme during this kind of incubation and sandbox period rather than having more prescriptive requirements. And so that allows people to tailor their controls to what the actual risks are in the new environment. Similarly, we see the UAE and Dubai doing a lot of investment into blockchain and trying to make themselves a regional center there. You see things happening in Luxembourg to try and make that a place where some things are happening with blockchain. Similarly, the other side, I mean, I'd say actually we're not doing a great job here in the US because we haven't created regulatory clarity for a lot of the companies here, and so that makes it hard to innovate. We haven't created an innovation sandbox, and the OCC has even pushed back against it in their most recent FinTech charter. And we haven't invested as a country, or as in many of the industries in the country, in becoming a blockchain center or a blockchain hub, other than the investments that have been made by the venture community and people in the blockchain community.
Yeah, I mean, from an Australian perspective, I think we're quite lucky in the fact that we've got one regulator and a government that's got an innovation agenda. So, I think if we can look to write the responsible adoption of blockchain from a mature market like Australia, and it's small enough, and then we've got a really good chance of working quite well globally.
You know what? It's also interesting, though, from a social good perspective, is that Dubai and Singapore, these are really interesting use cases for driving innovation. But I think if you look at countries like Estonia or the Republic of Georgia, where they're trying to adopt blockchain for certain uses within the government, not only to make the government more transparent and to make it work better, but to make it resistant, the government resistant to disruption of the type that might undermine private rights in land ownership, or in record keeping, or from experiences that they've had. And so I think there's also examples of that type from a social good perspective.
Great example to go.
Well, I'm mindful of time, guys. I think we've probably got a couple of minutes for questions. We've got a couple. Anyone got a question for my fabulous panel? Do we have a...
When should we not use blockchain?
Anytime you don't need it.
Yeah.
I mean, really, there are a lot of times you probably shouldn't use blockchain.
But I think to counter that point, I do think the reason a lot of people try to use blockchain is we're all in a learning cycle.
Yeah.
And so while blockchain may not be the best tool in the toolkit to solve a particular problem, I think everyone's just trying to get a better understanding of how this technology works and what type of problems it is well suited for. So while I agree that blockchain can't solve every problem, it's not a magical shiny pony or a panacea to all ills, as was said before, I do think we should encourage experimentation in a controlled, secure manner, because there is a real thirst for knowledge, and the more knowledge we have and the more that people learn, I think the more everyone in the ecosystem benefits. So not a bad thing.
Great answer.
So I think we've got time for one more question. There's nobody up there. Who's got the microphone?
Yeah, this question is to Melton. That you mentioned that the fintech should not be regulated the same way for the banking sector or existing ones. For the fintech industry, the argument is very clear. But for the banks, that they actually a lot of time that in any country that they will just push that why they are not regulated the same way as we are. And for you, that how can you just push back of that argument?
Well, I think one of the things that some regulators have tried to build in, which Justin alluded to, is a provisional on-ramp. So if you're custodying funds under 100 million, or if you have a smaller number of customers, then maybe there's a process you can go through where there are less stringent requirements initially, where over time there's a phased approach that as your business grows and as your organization grows and as the amount of capital you manage and the systemic risk you present to financial systems around the world grows, you would be subject to more and more stringent regulation. So I don't think the case is let's have no regulation for startups. It sounds like a terrible idea, but I think it's let's have a more phased process where we take into consideration just the position that startups are coming from. But I do think a lot of banks are starting to understand. One of our investors is Western Union, and they work with some of our startups and are looking at blockchain and Bitcoin. And the approach they've taken is not only can we get benefit out of using this technology, but we can actually help the startup ecosystem because we operate in 140 different countries and we have relationships with regulators in 140 different countries. So how do we work with companies that are trying to create new solutions to help them leverage our insights, our expertise, and our massive compliance function? And I think a lot of banks are also starting to take that mindset where it's less of a sort of competing threat, but it's more of a collaborative partnership to think about how both sides can benefit so that the end customer gets value out of that collaboration.
Well, I'd like everyone to put their hands together for my fabulous panel. Niraj has got to get on a plane, so I can't keep him because he might just go.